Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. Okay, so let's make a full breakdown of the situation that we currently have on NZD CAD. Now, the reason for which I want to speak specifically about NZD CAD is because it's definitely time for an update on the pair from our previous analysis on it. And we have to see what kind of opportunities we can be currently looking for on the pair. And as usual, I will keep the analysis as educational as possible. So first, I will be speaking about the technical aspect of this market. We will then go and see what is going on from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. And obviously, if you're able to follow what the biggest speculators in the market are doing, you do have an advantage over your competition in the market. And by the end of the video, you will know exactly what kind of opportunity we can be looking for on the pair. So without further ado, let's get straight into the analysis and see exactly what kind of opportunities we can be looking for on the pair. Now let's start from the monthly time frame. Now on the monthly, we have a very interesting price action. In fact, we have a market which has just broken above a quite strong and important bearish trend line. This zone was acting as very strong resistance. It was resistance here, again here, again here, again here, again here, and was supposed to act resistance here. However, the market broke it to the upside with this strong impulse. Now, after a trend line is broken, at that point, what you expect is a retest, and you expect the trend line, since it was resistance, to be acting at that point as support, because as you know, in the market, previous resistance, once it is broken, is turned support. So from a monthly perspective, we have previous resistance, turn support, which the market has tested and already rejected to the upside. What we can also see is that at this area, we also had horizontal structure. Why we had horizontal structure, and we actually still have horizontal structure, is because this zone was acting as very strong resistance here. But after the market broke it to the upside, at that point, previous resistance is turned support. So again, inside of this area, we also had strong horizontal support, which means that we had a confluence of support inside of this area given by the horizontal and this dynamic structure. Now, in general, if you have an impulse in the market, okay, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And what we can see is a very special thing. We can see that the market tested exactly the confluence of the 0.382 of the Fibonacci taken on the impulse with the support that at that point was given by the trend line exactly in this area. And obviously the market tested and rejected this extremely strong demand area very aggressively, because obviously if you have such a confluence of support, if the market will manage to go and test that area, it will be rejected very aggressively because it's full of liquidity and demand inside of such a zone. And the market is currently creating the continuation to the upside, which is exactly what you expect. In fact, you expect an impulse, a correction to the new support, and the continuation to the upside for the creation of a higher high. So at the moment on the monthly, everything is extremely clear. Perfect. Let's go down on the weekly and see what we have from a weekly perspective. Now here on the weekly, what we can see is that, first of all, we have a market which has now provided a very strong impulse to the upside, and in providing this impulse, we can also see that the market has created this overextended W formation. Now, generally speaking, after an overextended W formation, what you want to see is the market create a retracement at least to the 0.32 of the Fibonacci taken on the impulse. So after an overextended W formation, you take your Fibonacci on the impulse, and you want to see the market retrace at least to the 0.32 of the Fibonacci taken on this impulse. So in this specific case, we want to see the market retrace at least to the 0.382 of the Fibonacci taken from this low to this high. Now, what we can see if we do take the Fibonacci from this low to this high is that the 0.382 is exactly here. And this 0.382 is in perfect confluence with the previous resistance, which is now turned support, which creates a confluence of support area that the market could easily be attracted to grab some liquidity before the continuation to the upside for the completion of this weekly impulse correction and impulse pattern to the upside. So also in the weekly price action is quite clear. We do expect a retracement to this zone. Going down on the daily, what do we see? Now, first of all, from a daily perspective, we do see that we had definitely spoken about NZD-CAD quite a few times in the past. We spoke about NZD-CAD after the market had provided this W formation. I made a full breakdown when the market was here, explaining all the reasons for which from here we first wanted to see a retracement to complete the W formation exactly at this area, and then I wanted to see the continuation to the upside, and that is exactly what the market did. Then we had the creation of this overextended W formation, and when the market was here, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside to complete the pattern exactly at the previous resistance, which is now our support, and again, that is exactly what the market did. And my dog will not stop barking. As I was saying, that is exactly what the market did, completing the W formation at the neckline. Then we had the creation of this head and shoulders, which is exactly what we wanted to see. And we spoke about NZD-CAD again after this overextended W formation. And I made a full breakdown explaining all the reasons for which from here first, we wanted to see a retracement to complete the W formation. And then when the market was here, we wanted to see from here the market create the continuation to the upside. And again, that is exactly what the market did. And I will link all this previous analysis in description. So you find everything linked in description so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, obviously we did capitalize on this move with students and we're now out of the trade for a nice 3R profit on this trade. But currently, how has the new structure developed and how we can be looking for the shorting opportunity that we would like to see from a weekly perspective, because we have already identified that on the weekly, we would like to see the market create a completion at this structure. Now, one thing that we can quickly see from a daily perspective is that the market here has previous daily resistance, which is now turned support. In fact, this area was resistance here, and now that the market has broken above the zone, this is now turned support. So until the market will remain above this daily support area, the market will easily get rejected to the upside. So how can we be approaching a market that has a bearish target, however, bullish structure from a daily perspective? Well, before I show you this, let's first go and give a quick check at what we have from a COT perspective on the NZD and on the CAD. So what hedge funds are currently doing on these two currencies. Now, starting from the NZD, what we can see is that net positions lately have been massively increasing. We went from having 3.3k net positions all the way up to having 8.8k net positions. So a massive increase. We can also see that currently on the NZD, we do have 29.3k longs and 20.4k shorts. So definitely more longs than shorts. However, there are two very important things that we must notice. Number one, with the last two reports, hedge funds have started adding shorts. The second thing that we can see is that in the long term, shorts have been increasing. We went from 11k to 20k, which means that even though the market has been clearly moving to the upside and the NZD is very strong, there has been some shorting, which means that a retracement before the continuation to the upside is definitely possible. So long-term bullish for sure. However, we might get the retracement that we are looking for because we do see shorts getting added. And if we go and see what we have from a CAD perspective, we see exactly what we would like to see. So shorts getting closed and longs getting opened on it with net positions increasing. Obviously, yes, the CAD is still quite weak. However, we're starting to see longs getting added and shorts getting closed. In fact, that is exactly what we need. Why? Because in order to make this move to the downside, we need a retracement in the strength of the NZD. So we need a little bit a weak NZD and strong CAD. So having longs added from an institutional perspective on the CAD and shorts added from an institutional perspective on the NZD is exactly what we were hoping for. Now, The way in which we will be approaching this kind of situation with students is, as usual, being reactive and not predictive. We know that we have support here. However, until the market will remain above the zone, obviously we cannot be looking for the short. But if the market will manage to break below the structure, as you know, previous structure support, if it is broken to the downside, at that point is turned resistance. So if the market will manage to break and close below this area from a daily closing perspective, at that point, this previous resistance that is now support will again be turned resistance. So after the break on the retest of this structure, this is exactly where we will be monitoring price action with students for a shorting opportunity, and how we will be monitoring price action. Now, as usual, monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market, but the best time frame for confirmations and entries is the 4 hours. So what we will be doing if the market will manage to break and close from a daily closing perspective below this area is monitoring price action from a 4-hour perspective inside of this area. And we will be waiting for the market inside of here to shift from a 4-hour bullish market to a 4-hour bearish market. And if the market will manage to create one of our valid entries inside of this area, then with students, we will be taking a nice short for a very good risk to reward and very good probabilities at that point for the move to the downside and completion of the impulse and the overextended W formation that we have on the weekly at this zone, which is the 0.32 of the Fibonacci taken on the weekly impulse. But first, we need a daily break below the structure, and only then we can be looking for students for a shorting opportunity according our 4-hour entry rules. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.